Hi, this is Kirk with Forex Strategy Secrets, and what we're going to be talking about is how and when to exit a trade. This seems to be the biggest issue with most traders. First of all, most people, they figure out how to enter trades, how to find trades, and then they say, well, I'm still not making money. Well, it's because they don't know how to manage a trade properly, or they're inconsistent in the management of their trade. So that's what we want to talk about today. This is not a session on how to find entry signals. So I'm just going to pick places that I know were good entry signals, and we're looking back in the past because we're looking at what do I look for? What is it all? How does it all set up? This happens to be a 4-hour chart, so I know I'm going to put a mark where I would be looking to enter trades on a 4-hour. Possibly it could even be right there. Now this may change colors, but that's where I would start looking to do an entry. Now let's go to a 1-hour chart and say, okay, now the trade is taking off, and it gives us a good entry signal. So right here on that bar, when it passed below that fractal, or when it passed below the fractal, just happened to be on that bar. So we're going to use this for example as to when we entered a trade. Now we're going to manually show you how to manage a trade using the couple of different time frames. In the course, there's several other exit signals. We're going to just stick with 2 for today. These are my 2 favorites, and many times I will use these exclusively and not always go look at everything because I know that the market is changing directions. So you take a trade, we looked at it and found it on the 4-hour, we entered it based on this 1 hour, and now we're going to look at different ways of managing it. First of all, I'm going to zoom way out on this so you can see what takes place. So when we took this trade right here, we put a stop loss, could be right up in here. I'm going to change the color of this bar to a red, so we know that's a stop loss. So the green is our entry, and this is our stop loss. How far out are we? We're 41 pips on this particular illustration. So the first thing that you want to do is set a take profit. My suggestion is set the take profit out further than you think it will be. Sometimes it'll hit it. The reason I say that is because you can manage it from behind with this concept that we're talking about. And I'll show you examples of where I was taken out based on a take profit, and the stop loss would give me a few more pips. So right here, we enter that trade. So when this trade is entered, our stop goes up here. Now, when this next bar forms, if you're managing it by following it, the stop would move to the top of the Hakanashi. Okay, now the price is clear down in here. So how far are we? See, we're like 123 pips away, but we're just letting the system manage it and not jumping it too close. Now, because in this one, I probably would have moved it to break even and then started managing it. But let's just follow it on down. When this bar forms, we move the stop right to here. When this bar forms, we move it on down. See, we're doing a manual trailing stop. That's what that's called. So you're manually, every hour, you're coming back, looking at it, and you're moving your stop. What if you waited a couple of hours and this bar just formed? Where would you move your stop then? I wouldn't move it to that one. I would move it down 2 because this is the bar that was just formed. And so you can see you're trailing it. Notice how the Hakanashi is getting smaller. That's a sign that the trade is coming to an end. Well, if we said, well, it's coming to an end right here, went sideways, did a little bit of a retracement, well, we would have been out, and look how far this went on down. Another 60 pips could have been made. So as this bar forms right here, where do we move it? The one just prior to it. I didn't go to each one. I skipped 2 hours. So you can move it down each hour, you can move it on down. So now we've got a big piece of profit protected here on this 1-hour chart. These trades happen on a regular basis, these large trades, and so you can manage them on different time frames. We're going to look at managing this on the 4-hour, and we're going to look at it managing it on the, let's say, a 30-minute. So as each of these bars forms, you notice that the price did not go above the top of the previous bar. So when this bar formed, you may have been taken out right here. This may have changed colors. If it changed colors, look how close you are. You're within 5 pips, either the trailing stop or the Hakanashi changing colors. Either one will take you out, is what you should consider being taken out, I should say. But if you didn't get out there, then when this bar formed right here, your stop would be right here, and as it passed above that, that's where you would have gotten out, been taken out. So someplace right in there. How many pips was this? Okay, 200. We're just going to round it to 200 pips on that 1-hour chart. Now, the same area, we're going to go to the 4-hour chart. And let's say we managed it on the 4-hour chart. Okay, right here. We come down, and we're going to move this back up to right up here. So there's our stop. This bar forms, that's where the stop would go. The next bar forms, now we move it down, we're in profit. Now this is every 4 hours this is taking place. So when this bar forms, where does it go? Your stop would be clear down to here if you're just manually following it down. Now look what happens. Right here, this bar went back up above that Hakanashi right there. So how many pips would you have received here on this one? 100 and we're going to round it to 180. That's the 1 hour is 200, 4 hour is 180. So you can see that the larger time frame, in this case, if you'd had a trailing stop on it, if you just had the regular stop on it, it would have taken you out clear down in this range. Now, what is the regular stop? The regular stop is when the Hakanashi changes colors. That would say, yes, that's a time to consider exiting the trade. That's one of the exit signals. Now, let's look at the 30-minute time frame. See, we still have our entry up here. We've entered the trade there. And see the concept? We move the red line back up to here. So there's your stop. When this bar formed, it moved it to there. And each time it moves. So when this bar formed right here, the stop was moved down to here. It's getting close. That was like 10, maybe 13 pips away. And so as each bar forms, you keep on moving your stop down. It's getting pretty close. It may, depend on the spread, it may have taken it out right here. But let's just go by saying the colors. We're seeing finished bars, not what happened during the course of the bar. And so you can see that it would move down, 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 down. It would be the top of this one, and it changed colors right there. On this 30-minute, how many potential pips did we get? About 194 on that. Either time frame you entered it on, you received a lot of pips on that particular trade. So that's the concept of trailing your stop. Now the other thing is which time frame to choose. Many times I'll start off using the one that I entered on. So on this one we entered on the 1 hour time frame. And you can go back and forth. You can change and start doing it on the 30-minute. You can go back to the 1 hour and just see which one's easiest to read, which one's moving the best for you. And that's a management decision. There's no set rule as to saying which time frame. Many times you can have an entry time frame and you'll manage it maybe on one time frame higher. Let's take this little section here. This was just a impulsive move, a corrective move, and if you were not still in the trade, you would have been getting into the trade, possibly right in there is where you would enter this trade as one possibility of entering a trade. So now let's go to the 4 hour, And look at this. So the 4 hour, yes, you would have been taken out because it came back up above that if you had the trailing stop. And we come down. Now we're managing this on if we do this on the 4 hour again, we enter the trade right here. The stop would be at least right here. And as it goes down, let's say this bar forms, we move it down to here. As this bar forms, we move it to here, and this is where it was taken out. It did it one of two ways. There's 50 some odd pips there. It did it when the price came back up or the Hakanashi changed colors. They're so close together in this instance, I don't know which one would have taken it out. Either way, you would be within a few pips of getting out on that one. Let's see if we would have received any more pips by using the 1 hour to manage this trade on. So we managed it on the 4 hour, which took us out right in this area. But look at this 1 hour. We maybe have received a few more pips until it came back and took us out in that area. There's 50 pips, and this is like 70 pips. Let's see if the 30-minute would have done anything different. Okay, this was not above. That was not above. It's not a matter of the one, if it pokes its nose above the current bar, because the stop loss is above the previous. It would have been right in here where it possibly would have been taken out. And see, that's very close to where it's so close here we don't know which one would have taken it out. So we're still about the same on this one. So the 30 minute or 1 hour would have been the same. You get the concept, how you follow it down, and you can see a move right down here. This is on the 30-minute. So you would have been taken out right here on this 30-minute. Now, what do you think is going to happen on this 1 hour? That's where you've been exited someplace right in there on the 30-minute. Let's look at the 1 hour. See, the 1 hour, you would have been able to stay in a little longer and make more pips on that one. What about the 4 hour? You would have made less on the 4 hour. Now, there's a time to use the 4 hour. Many times I'll use the 4 hour when I'm starting off. And then maybe I'll switch back to the 1 hour or 30-minute, depending on what the size of the Hakanashis are doing. Remember what I said? As the Hakanashis get smaller, you really see it on this 30-minute. Now let's look at the bodies of the Hakanashi. As it gets smaller and smaller, then that's a sign that the market is slowing, and you may want to tighten up your stops. Now I want to show you some actual trades that I took. It wasn't taken on the 4 hour, but the 4 hour said it was okay to consider getting into a trade right there. Now you can see that I was taken out right here. This is because it hit my take profit. But you can see that the market moved on down based on the price bars. It was pretty choppy, and it did come back up based on what we were talking about. It probably would have taken you out not too far below that, maybe another 10 pips. That's all you would have received out of that. So let's go to the 1 hour time frame. Could we have picked up a few more pips based on the 1 hour? So let's do this. So we know where we entered, but let's say we timed it on the 1 hour. Well, when this bar formed, the stop would have still been up here. And let's move it on down, see if I would have gotten a better exit signal. When this bar formed, I would have been right here. And when this bar right here formed, we would have been right here. Now do this. Actually take some trades, do it on a demo account, and be patient. Let the time frames form. Follow it and see what it turns out to be. This one wasn't much different than my actual take profit was set. And so either way, I would have been okay. Now, what if I'd had my take profit set clear out here? Well, eventually I would have been taken out at my take profit. And depending on how tight I had my stop, I may have been taken out when I came back on my stop, or the take profit would have taken me out. So the thing I'm saying is set your take profit out further than you think you might get hit. Now, if you're not going to be able to manage it and be there, then set it where you would normally set it, and you'll probably get your more pips that way. But if you're going to be able to come back and manage it, or some other ways we're going to show you, then you can set your take profit out further and actually in the long run make more pips. So that's one where it didn't make much difference where my take profit was or the following it on a stop. Okay, here's one that I actually took this morning. You see how I managed it? I moved my stop down. I was managing. It came up and just clicked my button. I wasn't negative. I didn't lose anything on the trade, but I had my take profit right in this area. That's about where my take profit was set. But as it got close to that, I moved it out even further. Now, do you think it's going to hit it? Possibly. It could still go out and hit a take profit that was out here. This is where I moved it to. Okay, now let me just go through these series as to how I was managing this trade. It was taken primarily on the 4-hour. I took the trade. Now, normally I would have managed it differently. I was trying to illustrate a point to those who were in attendance in the trading room. So if you were there, you saw me going back and forth. And I started out actually managing it possibly on the 15-minute time frame. And it started going down. And the stop was moving down. I'm thinking the stop was right here, I'm thinking, and then it came down. And then I thought, well, I'm going to manage it on a 30-minute to give it a little more room. And so I managed it on a 30-minute. And I was using the automated stops, and I'll show you that in just a moment. And since I don't have any trades on, it may not show up properly. But I managed it, and I set it so that it was back up a ways. Now what I'm going to do on this particular trade right here, I'm actually going to enter a trade on the Aussie New Zealand. Which direction do you think I ought to take it? I think I'm going to still take it short. And where did it go? It's probably underneath that line. I didn't take the Aussie New Zealand. I thought I did. Okay, that's the trade. What did I take? The other one. Euro US. So I don't know if that was a good trade or not. For some reason, I thought I was on the. We'll look at that in a minute and see if that's even a good trade. So right here, where would I place my stop? One possibility, this is on a 30-minute time frame, would be right here at this swing high. So how would we have, what would we have there? We got 19 pips. What's my take profit? Well, it's right here. It's going to be very small, but let's set it out. This is not, let's just set it so it visually looks like, there it looks like a 1-to-1 ratio on this one. Let's look at the 15. That's really not a good place to take a trade, but I'm doing it for illustration purposes. Okay, now I'm going to show you the automated version of the stops. It takes a minute for it to apply. Okay, now it says I have these two trades on, and there's an early bird stop portion, which means the Hakanashi is changing colors. There's the trailing stop, which is the one where it follows above the top of the Hakanashi. So one is going to close it out down when this changes colors, which would be the same place on that particular move. So I'm going to do the Aussie, click there. Okay, now if you have all these green check marks, that means I could place a stop on any time frame and it would work for me. I'm going to set on the 15-minute. And the trailing stop, I'm going to set it on the 15-minute as well. This one, let's just look. I don't know. I didn't even see which one this was. This one, you could take it on most of the signals, but right in here, you can't take a trade. So if you did, you know what would happen if I clicked on that 30-minute or the 15-minute? it would instantly close the trade. So you have to have the green check to say, okay, go ahead. Now I'm going to just update it, and then we'll go back and look at the euro dollar. Okay, that's on the 15-minute. Trailing stop is trailing. It'll be 1 pip above the previous Hakanashi's high, or below the previous Hakanashi's low. If it were 50, that would be 5 pips. So you can actually set it and adjust it a little bit there. Very shortly, this should move down to the top of this one right there, about 5 or 6 pips. So we'll see it through the course of the webinar. You'll see it actually move. I'm going to draw a line as to about where it's going to move to. Okay, now we'll go look at some other things. Now, what's happening here is I don't have to watch this anymore. It's set. It will give me a small loss, but I will not have a big loss. If the market really turns against me and wants to go right up to my stop loss of 20 pips, that's not going to happen. It will come down first, and if I have a loss at all, it'll be something probably 10 pips or less. But it's going to, we'll see if it's going to trail or not. Let's look at the 5-minute on this. Could we manage this on the 5-minute? Yes, we can. Let me see if we can change it on the fly, so let's just actually manage this on the 5-minute so we can see it doing something. And remember, it takes a minute to come up. I just have to click here. I want to manage on the 5-minute. I want it to trail on the 5-minute. And then I update it. This one, it won't be too long before it moves down to right in here. If it happens when this forms a new bar, which is in 2 minutes, it will move to the top of that one. So sometimes it moves sooner, and other times it takes a little bit for it to move. And I haven't figured out, I thought it was when the price bar moved, but many times it's when the new price bar forms, or when the price moves, or when the price bar forms. So we'll just watch this, see if it moves on the 5-minute. Now let's look at this euro dollar that I took the trade on by mistake. Okay, I took a sell trade. I am positive on it currently. It's on a 5-minute chart. And since it is positive, let's just manage it on the 5-minute. Bar over, we're here. You notice this is orange. That means it's not totally set on these two things. Go here, we're looking at the 5-minute. Notice that turns to green. We click this, and we turn it to the 5-minute. See there, the stop. I didn't have a hard stop on this one. I let it just formed. See, it's probably 1 pip. It's like 1 pip above the previous bar. And so we have about 30 seconds, and this will form a new 1-minute bar, or excuse me, 5-minute bar, and the price will move down. So this is the automated version. Now we're doing this on the 5-minute. It's where this is extremely valuable, is when you're not able to be in front of the computer, and you would manage it on the 1 or the 4-hour time frame, and it will just keep on chugging along. Okay, did you see that? This bar formed, and it moved down to 1 pip above the previous bar. So it's trailing the stop. The next one will be, if it doesn't come back and take me out, it will be like about a -1, mostly 2 pips is all I will lose on this trade. Anyway, so you remember this was a mistake trade. I thought I'd clicked on the other currency pair, but for some reason it was actually gave me this one, so I didn't check it to make sure what was going on. But it could turn out to be a good example. Does it work on a different trading platform other than MT4? No. It's programmed for the MetaTrader 4 platform, and that's the only platform it will work on. The one thing I will say, I don't care whether you're trading the day chart or whether you're trading something smaller, 1 hour, 30 minute, 15 minute, 5 minute time frames. Find a trend on a larger time frame. I would suggest find the trend on the 4-hour time frame and then trade in that direction. If you have a 1-day chart time frame, there are ways to determine whether you want to, which direction you would want to be trading. But I would wait until that 4-hour time frame matches up with the day and then goes in the direction. The other thing is, if you have a 4-hour, then use the 1 hour to confirm, the 30-minute to enter a trade, or maybe the 1 hour to confirm, or 15-minute take a trade. But find a larger time frame, find the trend on that time frame, and then that will help you to know which way to trade based on your ability to be in front of the computer. If you have a busy schedule or you're working, maybe the day and 4-hour, 1 hour will be better time frames. If you can spend time in front of the computer, maybe the 4-hour, 1 hour, 15-minute, 30-minute would be okay time frames, because you have time to be there and be near a computer. Just a little bit of information on time frames. The trailing stop will start trailing on the previous bar, whether you're in profit or not. So it will minimize your loss as the market, if it moves a little bit, a couple of time frames, and stays right steady, or goes a little bit in your favor and then starts to come back. If it does come back, you would then be taking out a small loss. When you're not in profit, it will actually give you less of a loss. Okay, see, you notice that I was not in profit and it trailed, and so I had a 2 pip loss. When this bar formed right here, it moved the stop up to here, or the color. It was when the color changed is what took it out. So I had both the early bird, which is the color change, and I had the trailing stop. This one, I think, looks like the color took it out. But see, it trailed it, small loss, 2 pips on that one. Okay, let's just look at the other one and see what it's doing, if it's even making any headway or not. Okay, it looks like it's just a little bit profit here. And where are we at? We're on this 5-minute chart, and we got 37 after. And so you can see it's moved to the previous bar. If it's still down in this area in another couple of minutes, it will move down just a little bit closer, by about another pip or so. And so the most loss I'd have with that was just a couple of pips. Now, I took these trades not at the ideal place. One of them was by accident. The other one was by design, knowing that it may not be a long-term position, but to show you how the stops worked. And I think they're giving good illustrations as to how they work. And see, that one came up and took me out. So what did I lose on that one? Yeah, I lost 2 pips on that one. So see, that's timing it too close. Now let's look at the 15-minute. Had we been on the 15-minute, the stop would have been up here. But I wanted you to see how it trails it down, and so that's why I went to the smaller time frame. So I'm showing you automated system visually, and I showed you the manual way of doing things. Do they work the same? Yes, they work the same. It's just one's doing it for you when you're not there. The other one, you have to be there to actually move the stops. What are the advantages of using an automated stop? Well, you don't second guess yourself. The stop takes you out where you said to take you out. It's not like, well, I better get out. I better get out. Well, no, it's not going to do that. It's going to take you out where it's supposed to take you out. It has no emotion, doesn't care. It's all based on numbers. And when that number is hit, it takes you out, or it is not hit, and you continue to stay in. So that's an advantage of the automated stops. The manual stop, there's nothing wrong with it, but you just have to be there. And you have to discipline yourself. That's the key. You might say, well, it's going to come back, and so you get out. Well, it did come back, but it kept on going, and you could have stayed in.
The automated stops on the do they run on your own MT4 platform, or do they run on a broker server?
That's a good question. They do run on your platform, so you need to leave your computer on all the time. Now, if you have a power outage, then the stops you're not going to catch anything. It'll just, wherever the last stop was set is where it's going to be just like a hard stop. So if you don't trust your power source, then you may want to get a battery backup so that it'll keep on running your computer when you have those spikes. Most of the time, in most areas, the power doesn't go off for long periods of time, but just like spikes. That's what I get as a surge. And then I would have to make sure my computer's on. Now, when the computer comes back on, it will just start managing again. But if there's a big delay, then it would stop it.
Another option would be to obtain a private VPS service.
Yeah.
And that let them worry about running it and keeping the power on.
They have what they call redundant backups, like backing up the backup several layers deep, so that they have like 99.9% uptime, and so they would be a good source. They cost a few bucks. You'd have to find out which one would work for you. You can look for VPS services, virtual private servers, what it's called. And that's a good point, Michael. Okay, the Norwood stops. If you just want to buy the stops by themselves, they're $50 per month, and it is a subscription. So each month you'd be charged $50. That would give you access to the stops. If you are unable to be near your computer all the time, or you have several trades, 4 to 5, 6 trades on at a time, the stops are a great tool to help you manage those trades. Here's information of how to contact Michael if you have questions, possibly a question of how do I get a hold of the stops if I want to use them. Is there a trial on them? No. For $50, if you're a serious trader, you should be able to have $50 to test this out. You'll know within a month whether it works. If it doesn't work, turn them off. If it works for you, continue to use it. And so if you're trading 10 cents per trade, I'm just using an example here, and you make 20 pips a day, 20 pips times 10 cents is what? You all have the answer already. It's $2. And so at $2, then you times that by 20 days. That's $40. So you don't have to be making very much to almost breaking even on the stops. At some point in time, you're going to be become very proficient, and you'll actually start making more than 20 pips a day if you keep at it on a steady basis. Most of the traders that set the goal at 20 or 30 pips, yes, they do reach it and they stay there for a while, but what would happen if you use 20 cents? So you got confident you're consistently making 20 pips a day and you did 20 cents. Well, that would be $80, so you actually have a profit and pay for your stops. It's http://tinyurl.com/107-nth. It's nth-degree-stops.
I've got to say, Kirk, most of the students have heard me say this before, but one of the things that I used to dream about, in fact, have good dreams about, was a way to exit trades when I'm asleep. And the reason I used to dream about that is because I would daydream with my head in the computer keyboard, waiting for an exit signal, and not being able to watch the computer all the time. I lived with some anxiety. And that was before Mitch taught me how to use some really cool targets that I can set. But these stops are an amazing option. If you have to take a trade, get up and walk away to go to work, go to a family party or a family thing, or shopping, or to sleep, these things are a lifesaver. I've always been able to have good exits when I come back. That's as long as I keep my computer running. And so we have some training on our website. Every single one of you, even those of you that only have Jumpstart, have a way to go in and take a look at the training on how to keep your computer from going to sleep on you. Okay. I think that they are worth a try. Once you have learned how to trade and you've discovered that trade exits are hard for you, and the reason that you're losing at trading are your exits, and the reason you're not exiting properly is because you're at work or asleep, try these out. It is worth treating yourself to this product. I think it's one of the best things that we've got to help a student reduce anxiety and take high probability exits at whatever the market has to offer in that time frame.